Hi, welcome to the Market Alert for Tuesday, the 7th of November 2017. Starting off with the pound yesterday, we had potential buy signal. Unfortunately, it wasn't filled within the 3 bars. And as you can see, following this, the market moved to the upside in the late afternoon and then overnight. At the moment, we've got potential short marked up as the market starts to give back some of the overnight gains. We're finding support at the moment at the 131 level there, 131.50. In the daily chart, still stuck in this sideways range between 133, 130 that you can see there as well, market below the average line at the moment. So a bit of movement on the pound. But in the Dow, the movement is happening, but it's at the wrong time. As you'll see yesterday afternoon, the market was stuck in a range, working its way to the upside. You say the buy side is the only side in this market at the moment. And for the reasons, obviously, I've stated on numerous occasions over the last few months, years. And you can see there the market continuing to move to the upside on the overnight. They're doing everything they can to get this market up, and they're going to keep pushing it up as well. 24,000 is the next target. It is going to reach it because that's exactly what they're after. They want to just keep the illusion alive that everything is fine. We've got a new high there now, which is going to be taken out today. 23,624, 21 I think that is. Let me just remove this other one. 21. So, yeah, it's only a matter of a few hundred points now till we actually break 24,000 as well. So the madness continues, the insanity continues, and speaking of which, today looks like we've got a few central bankers out today as well. But starting off in the UK, we've got the Halifax HPMI, House Price Index, that's going to show a slight fall according to the forecast there. And then we've got a trio of central bankers. I wouldn't call them the Three Musketeers personally, but we've got Super Mario Qualls, never heard of Qualls, must be a new one. And then of course Yellen, she's speaking at 7:30 p.m. possibly one of these university gigs that they get now and again, where, you know, Harvard, where they go and speak. I don't know why she's speaking, but nonetheless, the market will be hanging on every word just to see if there's going to be a rate cut in December. So that's all of that. One thing I did see this morning, I was looking through the news, and this is the hyper crash is coming. It's not the everything bubble, it's the global short volatility bubble. Bit of a complicated or highly technical, well, say highly technical, slightly technical view of the volatility markets at the moment, and why we're not getting any. It's because they're selling 2 trillion or sold 2 trillion futures and all sorts of the derivatives into this market to keep the pressure down on it. But certainly the chart in the article is a very interesting one. I'll just show you this. And there you can see we've got the dot-com bubble, the housing bubble of 2008 when they had the toxic mortgages, and then the everything bubble that they're calling it. But I would agree with this article that it's the volatility bubble that's the issue here, because obviously we've not got everything in a bubble, including gold or the commodity sector. So it's not an everything bubble, but certainly stocks, bonds and volatility at all-time record lows as they try and keep this illusion alive, and that's what they're going to continue to do. No doubts about that whatsoever going forward. And speaking of volatility, let's just have a quick look. So the implied volatility up slightly from 928 to 946, given the market was sideways and a lot of indecision yesterday during the main part of the session. No doubt this will drop if the market continues to move higher today on the as it hangs on the very words of Draghi and Yellen, which again, just to remind you, is out later on today. How the markets will react, I do not know. You may have noticed that we don't get the same sort of volatility reaction when they do speak now, because of the suppression of volatility through the VIX futures by selling into those markets. So once again, we're in uncharted territory with regards to the market direction now to when central bankers actually speak as well. A strange world we live in. It's certainly become very much centralized and manipulated. Right, that will do it for this one. Tuesday is generally quiet, but we can see we've got a lot of activity on the overnight market already, the market moving higher. Whether this continues through up to when the central bankers speak, who knows, but I'll have a look at the sort of the pre-market price action first, and then decide whether there's going to be any further upside momentum. You just don't know anymore. These things can just keep marching on no news, or on the slightest bit of news as well. Right, that's it. Everything to report. I will let you know. Other than that, thanks for watching. See you in the next one.